What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 13th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we've got a wide range of topics to focus on. To start, we'll take a look over Bitcoin's price and talk about some key indicators we're utilizing in order to determine and confirm whether we have a breakout in price or breakdown. And outside of that as well, in the sense of headlines, we're going to be taking a look at some predictions from Tom Lee, take a look at some local Bitcoin's volume to see if Bitcoin is really serving as a hedge for emerging markets. And then outside of that as well, taking a look at the very important news that the United States has finally reached back to $1 trillion deficit annually. And what this means and why we're seeing larger deficits. It has a lot to do with monetary policy. But outside of that as well, to let you all know, we have got a sponsored review towards the end of the video where we're going to be reviewing the credits platform and following up from our previous episodes. So I highly recommend you stick around for it. It's going to be interesting. But let's go ahead and dive into the market analysis. So we can see here most cryptocurrencies at the moment are in a no trend scenario across the board, somewhere between 1% to 2% to the upside or downside. If we take a look here at global charts, market cap really unchanged here again all throughout the month of September, pushing sideways and getting more and more narrow into the wedge here. And the one thing that I find really important, again, is that altcoins, again, aren't fluttering to the downside. This isn't just Bitcoin. It's a general sideways trend that we're seeing across the board of the market. And if we take a look at the overall dominance, again, we're still pressing around this 70% mark. And I think this is really going to be a contingency point, guys. If we don't see altcoins start to gain some dominance, especially as the momentum is slowed down on Bitcoin dominance growth here, and as we correlate around a big even level like 70%, again, this is going to be one of the make or break moments here. And we've talked about that as we take a look at the chart. We will take a look at overall altcoin market cap and stuff in a moment, just to really showcase how important this level is, as we've talked about the historical correlation in its previous corrections in the past. All right, but let's go ahead and run through the obvious thing here, and that is Bitcoin. Now, as I've talked about here, again, as we've been going through what could be seen as a wedge, setting triangle, it doesn't really matter. Either way, the clear sign here that we're looking for is a close above either the line of resistance or a close below the line of support, all right? Doesn't matter if it's a descending triangle or wedge, you can have it drawn slightly different, but it's going to be around the same levels here, roughly around the lower $9,000 range. And then as we continue to get more narrow here in the sense of the line of resistance, mid $10,000 range, right? So we are pressing closer towards a breakout point here. But again, until we really have a solidified close with good volume breaking above there, I'm not going to be too confident. I'm not going to be overtly bullish in that case and say, oh, we're guaranteed to go up, right? We wait until the wedge shows us the direction that the market wants to go. And there's a few things we're keeping in mind here, right? We've obviously been watching the moving averages. It's going to be important for price to hold above these moving averages and then eventually, of course, make it support in this case. But outside of that, there are a few other indicators that I'm looking at. Okay, so let's go ahead and run through those. So the first thing I'm looking for is obviously a breakout in volume. Now, again, this isn't a bullish or bearish thing. It really depends on where price goes. If it's heavy sell side volume, that could be a precursor to know that, okay, we're probably going to go down below the line of support here, correct down something like the 200-day moving average, right? Either way, we're looking for a serious pickup in volume to determine that breakout or breakdown, right? We haven't gotten that yet. We've been getting declining volume here. A simple line of resistance and volume has been keeping volume on exchanges lower. We're not seeing any excessive trading, right? Now, outside of that as well, we take a look here at the MACD. Now, the MACD, the past 3 times here, has been a good sign to find an entry in crypto markets, right? We saw the MACD cross here. We saw the MACD cross over here and over here as well. Each time, again, being a really clear indicator that momentum was coming back in, and it was a decent short-term buy point. But interestingly enough, the MACD here, not really picking up much momentum. And if we take a look at the gap between the two lines here, right, on the MACD here, the divergence between the two, we can see previously that both times we actually had a decent amount of divergence between the two lines on the MACD, but this time around, we actually don't see much of a divergence in this case, and it's already kind of flatlined. Whereas again, most times, it was a build-up here. You could sense the momentum. The MACD was in play. And really, this MACD cross has been quite weak so far. So I would actually give some points to the bears on this one. Again, MACD, which has been a really reliant indicator, not showing any good signs. Now, another thing that I'm going to be looking for, and really interestingly enough, it is lining up almost practically with our line of support and resistance, and that is the Bollinger Bands. Now, I think the Bollinger Bands don't get used enough because they're actually a really decent indicator in my mind. And it's a reason why we talked about it in the Trading Tips series. So the Bollinger Bands, in this case, again, are going to show us a range here, basically divergence off of the midline here, which is a 20 SMA. And in this case, we can expect that this is the general range price will keep in. Price will keep in this range, 90, 95% of the time. Well, I'm believing that, again, when we get a close above one of the lines, one of the bands here for the Bollinger Bands, I think that's where we're going to, again, have solidification that the market's picking up its trend. It's decided what direction it wants to go, especially as we get more and more narrow into this wedge here. So, again, I'll go ahead and list off what I'm looking for here. I'm looking for a close on one end of the band. I'm looking for a breakout in volume. And I'm looking for either the MACD to pick up momentum, or if it crosses down below the orange line, in the sense of the blue line of the MACD, in that case, I give it to the bears in that case, right? So in the case of the bearish case, you'd have a close below the line of support here, below the bands and the Bollinger Bands. You'd have a breakout in volume, obviously sell side volume, and you'd have a cross downward on the MACD. And vice versa in this case for the bulls, right? MACD needs to continue. We need to have a breakout in volume, it needs to be upside volume. Luckily, hopefully, we price that would be going above the line of resistance and above the band here. So not overcomplicating it, but I can guarantee you to a decent degree. Again, no promises. It's not financial advice, but I can tell you with decent confidence that those things alone will give us a pretty good sign of where the market is going to pick up direction. But again, I'd love to hear from you guys. Again, it's just my personal perspective. I like to keep things simple when I use indicators and look at ones that are consistent. And when you start to use a combination of indicators, your probability can be a lot more certain in this case. Again, you don't want to just use indicators as a certainty, but at the same time, you're measuring your probability here, your risk and reward. All right. So let's go ahead here, talk about Tom Lee's predictions. Now, Tom, who I've met personally a long time ago, we actually met in Bangkok in Thailand when he was speaking at a conference. He's a really nice guy. He is who he is on TV. He's very soft-spoken. And I got to say, and I appreciate his perspective on the longer-term picture of cryptocurrencies, because he sees cryptocurrencies, especially Bitcoin, as my generation's gold. It's the new store of value. It is the new asset from our generation. And I 100% agree with him, right? And it's for anyone, really. I know we have people from all age groups and stuff when it comes to cryptocurrencies here on the channel. But it is definitely, I think, a really good philosophy to really see how gold played out during the 80s and the 90s. It became an emerging financial asset for the global stage. Now, in the sense of the shorter term stuff, which we're going to talk about today, Tom Lee actually has a very contrarian view to most people, and probably a little bit different from my view. So I thought I might as well go ahead and talk about it and share that perspective. So in an interview that he did for CNBC, Lee really kind of stepped out of the narrative that most people have argued, that is that Bitcoin is a hedging asset, right? He basically stated that Bitcoin as an asset is probably going to do much better if the S&P 500, as he predicts, is going to continue rallying. So he believes as the S&P 500 and other major indices on the stock market and predominantly U.S. equities go up, that Bitcoin is going to go up as well. Because he believes that in this case, as equities go up again, Bitcoin is being treated mostly by most traders and investors as a risk-on asset. So let's go ahead and read his quote here. Bitcoin has stalled recently because the macro outlook has stalled. In a world without trend, Bitcoin doesn't go up. So I think the next big catalyst is a decisive breakout in the equity markets, because once equities reach an all-time high, Bitcoin becomes a risk-on asset. Now, he also mentions one other thing here, and I think this is, an interesting perspective, but he said Bitcoin may be ambidextrous. So for those of you who don't know, in this case, what he's utilizing the term for in this case being ambidextrous is that Bitcoin kind of gets the best of both worlds. It can be a risky asset in times of bull markets and in these speculative periods and waves of time, like we saw with the previous ICO bubble and what happened in 2017. But along with that as well, Bitcoin can eventually be seen as a risk-off asset as well, right? You get this debate between the community here. And I will say, as much as I see Bitcoin more as a risk-off asset in the long term as it evolves as an asset and really matures, especially in the environment that it's going to spend most of its life in, which is going to be, I think, a risk-off market where people are getting fearful of either national currencies and emerging markets, government bonds that, again, are going into negative yielding territory, and then also a declining equity market over the next few years. even though we might have some kind of room to grow in the S&P 500, I believe we've got much more downside here over the next few years. So as Bitcoin matures as an asset and gets institutional exposure during this time period, I personally believe it's going to be more seen as a risk-off asset. But what Tom's saying here is that Bitcoin can kind of take the best of both worlds, and that's a benefit to it as an asset because we're still trying to understand what Bitcoin is. Is it a risk-off asset? Is it something that we speculate on, right? Well, people do a little bit of both. Some people use Bitcoin as a hedge. Some people use it to speculate. So it's a very interesting combination here, but I think overall it speaks to the fact that Bitcoin's got a long way to grow, right? It's an early asset. So I think that's really where the benefit comes here. And that's why Bitcoin can grow during times of fear and also during times of speculation and rampant investment. Anyways, thought I'd share that. Tom Lee's a really nice guy and stuff. He's made some great calls, missed on a few calls. I've done the same as well, like any other person in the crypto space. So I do love to listen to what he's got to say because he does a lot of good data research at Fundstrat, the company he runs, or at least he's a big part of. All right, so let's go ahead and talk about the emerging market economies, Venezuela, Argentina, who have been going through their own currency crises. The question here is whether or not Bitcoin is really serving as a hedge. Well, we don't have all the data in the world, guys. To be fair, we don't have access to mainstream exchange services. We don't have access to a whole plethora of the amount of users, data sets that show us how many users are using crypto, which ones are the most popular. But we do have one thing that a lot of people use as an indicator, and that is local Bitcoin's volume. Now, so you can see here in the Cointelegraph article, they wrote about how we've seen over $120 billion in Bolivar volume here for trades to Bitcoin, right? And these are all-time highs in the sense of Bolivars. But the question here is that, is it larger sums of money than what we've seen over time? Are we growing in this case? And I think we need to be fair about this, right? Local Bitcoins is a pretty good indicator in this case to see when there is demand for, actual Bitcoin trading, especially on a retail client side. Well, the important thing that is, good to mention here is that the Venezuelan Bolivar, is devaluing over time. So you're obviously going to see more Bolivar volume, but it's also important to take a look at the amount of Bitcoin traded. And then to also be equal to factor in the change in price. Well, from this time range here where Bitcoin, there was around 2,500 Bitcoin being traded on a weekly basis in February of 2019. Right? What we actually find here is that there's a very interesting fact that if you consider price in the sense of the decline of overall Bitcoin, right? So now we're trading around 500 and we were originally trading 2,500. We're actually still seeing a slight decline here from this range here in February on the amount of Bitcoin. Now, I would say the reason for this is that it doesn't seem as of now that the fiat currency, collapse of the Venezuelan Bolivar is getting any worse. The Venezuelan Bolivar is already devalued, right? There's not much, room left to hopefully go to a hedge and save your value. The value has already been expended, I guess it's already been, depleted from the fact that the Venezuelan government has printed beyond means. And again, with the all of the things that are going on right now, again, even though there are a lot of macro factors and a lot of geopolitical issues going on in Venezuela, to be fair, I don't really see any reason for it to continue increasing. And not to mention, you're only going to get so many people through local Bitcoins. You need an easier entry point. Same thing goes here for Argentina, right? We've been seeing how Argentina, over these past few weeks, had massive currency devaluation. Well, if you take in the factor of Bitcoin here, it's really pretty much on the same exact level of volume that it was seeing back here in February of 2019, right? About a 3x in price, 1/3 of the Bitcoin volume being traded on a weekly basis. So no serious increase. But I will tell you all that in Argentina, probably just as much as anywhere in South America, there is a lot of talk about cryptocurrencies, huge conferences going on that people are attending. So I do believe we are seeing at least a stagnation, if not a slight growth, in the sense of the overall longer term trend, but we need to create easier entry points for cryptocurrencies, which we just don't have yet. We just don't. All right. So let's go ahead here and talk a little bit about the government deficit in the United States. Now, obviously, it's always very common for people to kind of fret and talk about U.S. debt, government debt. But honestly, guys, the United States is really not in as much of a hot mess as a lot of parts of the world, because our debt, or our bonds in this case, that allow us to spend the way we do when the government issues treasuries, is not negative yielding. And because of that, we actually have a very big benefit in the United States. Many might say, if the economy is so great, why are we getting up to trillion-dollar deficits? Well, I'm not sitting here trying to defend the economy. I don't think the economy is doing that great. I don't think it's been doing great for a long time, especially for average working class citizens. But I'll tell you this, there's a reason why we're going through heightened deficits now. The reason why is because, A, rates are still pretty low, but at the same time, in this case, countries across the world, other governments, private investors, are absolutely eager to buy U.S. treasuries. Doesn't matter how many are really being issued, they'll pick it up because it's actually yielding them something. And it's in one of the strongest economies in the world. So this is why we're accelerating our deficit. We are spending now because on the geopolitical scale, in the sense of bond markets and monetary policy, that does impact the yields on those bonds and the value of them as well. Because of that, people are absolutely willing to finance these deficits. Right? We've got buyers all across the world who are willing to buy up our treasuries and give us cash. So this means that, again, in this time period, it'd be very likely that you'd hear about big things like infrastructure spending, right? Big things that really, you could get bipartisan support for, and again, could really finance huge growth in the economy. Now, again, it's all debt spending, right? It's not good in the long term. We're going to have to pay that debt back eventually, but this is why we're doing it, right? The rates being relatively low still, and then also the fact that, again, everyone is willing to finance our debt right now. So, very important lesson to take into account. And again, it's why I talk about bonds being extremely important. If you want to have macro opinions on whether or not the United States is strong versus other countries, and whose equity markets are stronger, and when can we expect the U.S. to be strong or weak, you have to understand a lot of these niche things. It's not all a very simple picture. It's much more complex than most people put it out to be. Anyways, everyone, that is going to be it for our analysis on the market. Let's go ahead and dive into our review of the credits blockchain. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Credits. Now, some of you may remember a little while back that we did a previous sponsored review of Credits, taking a look at their mobile and web wallet, and we not only got a good feel for the solid user experience that the team has provided in order to properly interact with the Credits blockchain, but along with that, just how quick we can get finality on transactions, and this really speaks to what Credits is all about. For those of you out there who may not know what Credits is about, Credits is a public ledger. It is a public blockchain protocol that allows you to send peer-to-peer transactions, utilize smart contracts with the Java programming language, and also build interesting decentralized applications to interact on chain in unique ways. So it's really covering a large ground of what it means to be a protocol. And we're going to be learning even deeper throughout this review what Credits really does and how it stands out against the competition, taking a look at the pros and the cons. So let's go ahead and start off with the first key thing with any public ledger, and that is the immutability, the finality of transactions, and how quick we can find finality on transactions. So this is something that, again, that Credits prides. Its high scalability and its quick confirmation on transactions with its unique consensus mechanism. We can reach finality very quickly, and once those transactions are finalized, they're immutable on chain. So again, this is a very big thing that's a key with any protocol, and Credits meets this. But it doesn't just come with quick finality, right? Whether it be standard transactions or executing smart contracts, and again, the Java programming language, which, bear in mind, is probably one of the most used programming languages on the planet, so it provides a lot of developer flexibility. We have a lot of different benefits that come with settling transactions on Credits. Again, the quick finality of transactions, where it can take less than a second for finality. The fact that transaction fees are quite cheap. Again, we saw just how cheap it was to transfer value between the web and mobile wallet last time. And along with that as well, using a Turing-complete programming language, in this case Java. And it also comes with some other benefits. The ability to connect to external systems. So this is, again, connecting to maybe SAP integration. Again, being able to connect to traditional business systems to integrate blockchain as a layer of technology with other traditional business systems. Very important in that case to get some form of enterprise adoption in the long term. Now, a few other key things to take into mind. Credits right now is a relatively low valued cryptocurrency in the sense of its market cap. And then again, you can really see that as a pro or con here. You could see that there's potential maybe for it to go up. Again, you have to determine that for yourself. They've got over 20,000 people at the moment holding the crypto, and they've got a lot of different exchanges from centralized to decentralized ones that allow you to actually invest in Credits and be able to get some coins for yourself, for your wallet. So let's go ahead here and talk about some of the kind of use cases that I think are really important here. With a high throughput blockchain where you can actually settle things on chain and have finality, I think there's a lot of killer use cases for this that, again, seeing as we're not really requiring second layer solutions, is really important in this case to have things settled on chain. And the first one I can think of is financial asset issuance, right? Not only issuing assets in this case, in the case of creating new types of assets and digitizing assets from commodities to stocks to all kinds of different things outside of just cryptocurrencies and digital collectibles. But along with that, being able to exchange those assets in a very quick nature, right? And this is something that, again, credits provides. And they have a really nice little, again, this is one of many use cases that you can utilize credits for. But again, going through here and learning some of the benefits that credits provides, in this case, the ability to issue digital assets to create tokens on top of the credits network, and being able, again, to set certain parameters around it and be able to exchange them in unique ways through smart contracts. So this is what's exciting to me. I think that finance is the best use case for any public blockchain, and credits really speaks to this. Along with that as well, there's the Internet of Things. So the way that Internet of Things would work with something like credits, or mostly any public blockchain, would be that any IoT device would basically utilize unique forms of smart contracts to be able to confirm certain exchanges of data, certain actions, things of the sort once certain actions have been met, right? If this, then that. That's kind of the philosophy of how most smart contracts work. And in this case, credits, with its high throughput in this case, makes it a prime candidate to potentially be utilized by companies for Internet of Things, or IoT. So again, you can read through these different use cases. They have a list here, guys, and I recommend you look through some of their focus points. But again, it can be used for standard, simple peer-to-peer payments as well. But there's a lot of interesting, complex use cases for enterprise in order to utilize credits. So keep open to the idea that it can be used for more than that. So in the sense of kind of getting a framework of how to interact with the credits blockchain, the first thing to understand is that you can run your own node. Again, on their website, they have the not only the node here that you can run for Windows or other operating systems, but along with that as well, they have the online web wallet. So this is what we utilized in our previous video, and this allows you to store credits. It'll do the same kind of thing that you're expected with most cryptocurrencies. It's going to give you a public key as well as a private key, and you have to make sure to maintain your private key if you're going to hold your credits. And again, if you don't want to do that, there are exchanges, but again, as you all know, my thesis is you should manage your own keys. And you can take a look again through the user experience, whether you want to use the web wallet or if you feel more comfortable using the mobile wallet, which again, I personally prefer the mobile wallet. I love the clean user experience. This is exactly how crypto wallets should look. And I have to give credit to the team here. Again, they've built these different interfaces. So it's very good to have this right off the bat. A lot of crypto protocols didn't come with prominent wallets right off the bat. So I think it's very important that they've built these out so early on. And not to mention, in the sense of other expanded things and ways to interact with the credits ecosystem, you really do need this kind of infrastructure in order to make your public blockchain useful. So people, whether they be average everyday people like us right now, people who are just engaged in the crypto space, or enterprises, you need ways to store your credits and utilize them within the real world. And they have a web extension very similar to something like MetaMask that allows you to use your credit wallet right here from within the web. So a very interesting thing called Caesar. If you guys want to take a look at it, you're welcome to, and we'll leave a link down below in the description. And they also have a decentralized exchange. So I think this is pretty cool as well to, again, have from the team building out a decentralized exchange for people to not only, again, be able to access credits, but also to be able to trade credits against other different types of assets on the credits chain. And the benefit of this is that with the credits chain having such a high throughput, you can get finality on trades very quickly, similar to how you would on a centralized exchange. So I think that's really cool. And I think that it's important, again, to have high throughput in order to be able to make things like decentralized exchanges possible. Now, let's go ahead and talk about something that's very important when we're talking about any blockchain, because you can have high throughput, but you need to understand the importance of having a good consensus mechanism, and understand that the game theory within that consensus mechanism makes sure that that scalability is met with network security. So the major thing we want to take a look at here is credits consensus algorithm known as proof of agreement, okay, or POA in this case. Don't confuse it in this case with proof of authority, okay, which is used on other public blockchains. So, proof of agreement is a general mix here between the principles of Byzantine fault tolerance that we expect on a lot of blockchains, again, to reach finality, but along with that, delegated proof of stake. Now, you guys know that I've supported a lot of networks that use delegated proof of stake. We've talked about NANO, a few other players in the space, but using the combination of these two makes it really exciting. And again, I won't be able to dive through all of the intricacies as to how it works. It would take me a little while to explain it, but they not only have a good summary here talking about how you need anywhere from around 4 nodes to a maximum of 201 nodes to reach finality on those transactions. And these, again, are nodes that are currently staking on the network that have some stake of the credits coin. Now, you're going to need around 50,000 credits tokens in order to be able to be a staking node in this case, to earn and also be able to validate in the network. So the incentive there, as we alluded to with DPoS, is that we have delegated proof of stake. We have those who have a certain stake in the network and the incentive to reach confirmed transactions that are true on the network, okay? So again, you can take a look through it a little bit deeper. I'll go ahead and leave a link down below to a specific 12-page paper talking about this consensus mechanism. And again, you guys are welcome to dive in as well to the technical overview. This is a very important document to understand what credits can provide, and in a lot of cases how it provides it in this case, right? So again, understanding for the fact there that the blockchain itself is built in C++, and again, there's a difference between the language that is utilized to program smart contracts, that's Java in this case, whereas this is a public blockchain like most that are built in C++. So again, you can see some of the benefits here and learn a little bit again about some of the technical stack in this case as to how it operates. But again, from what I can tell, I'll be fair, there's some areas where I can speak and where I can't speak. I'm obviously no developer, so I can't really go into the deep dive of the backend as to whether or not credits is better than other public blockchains or not on its technical framework. But in the sense of what it can provide and what it can do, I have to say that the high throughput and the finality, the quick finality of transactions makes it stand out comparative to a lot of the competition. Now, there's a few other things taken in mind. As we hinted to earlier, again, you can earn staking a certain amount of credits tokens and running a node on the network. And again, that's going to require that you hold around 50,000 tokens. But what you do as one of the validators on the network is that you validate simple transactions like payments of credit tokens from peer-to-peer. You also confirm, executions of smart contracts, interactions on decentralized applications, all kinds of things on the credit network. So that's really the job in this case. You are the validator in this case. You're playing a role. And again, you're not always going to be a validator in each set of transactions with blocks coming out every second in this case. And again, you can take a look through the Explorer. You can see the blocks being created in real time. But again, understand that you won't always be the validator in this case. You have to be selected. So it's very key to understand that, but there is a way to earn in this case. And this is a good chart to understand over time with the growth in transactions and also the growth of nodes, how much you can be expected to earn on a monthly basis. In general, an estimate of how much you'd earn, again, by being randomly selected for that next round of validators. And there's really two things to factor: TPS per second, and then also the amount of nodes. So as more nodes come onto the network, as you probably see a correlation and an expectation of an increase in nodes with an increase in transactions, you're going to, again, be competing with other different nodes in the network, sharing those rewards in that case, so it does dilute. But if you're an early adopter and transactions start to increase higher, then you have a higher potential reward in this case, right? So that's the key thing to take into mind here. Depends, again, how much TPS are coming onto the chain. And again, over time, you will expect that the transactions will grow if the chain continues to provide value. Now, going back to a point I made earlier, and I just want to build on this again, as I mentioned, I'm not a developer, but what I can assess is that there is a lot of activity on the GitHub. Now, commits, I do know, don't mean that, there's an intense amount of value being created on the network. It doesn't solidify that, but you are welcome to go take a look at their GitHub. It shows that they're clearly active. They're the 13th most public active blockchain on GitHub that shares their open source code. And again, you are welcome to take a look at it. You're welcome to critique it. You're welcome to contribute to it and let the team know if you see any flaws or if you see where it could be improved upon. Again, they're an open book. They've got it all out there for you guys to take a look at. And I recommend, again, if you have the ability to read through their code, again, whether it be for the actual underlying chain, which again is in C++, or taking a look through their components that are focused in Java, in that case, you should go ahead and read through it. You can see the activity charts here and the 13 core developers at the team who are helping to contribute. So again, nice to see that this is all open and public to those out there who might be interested. And there's a few other things to keep in mind as well. Some key announcements coming up. I got to talk to the team a little bit to get an understanding of some big things that they have coming up. And I really like this big piece right here. A recent announcement from the company is that they're going to be doing an accelerator program where they're going to be putting up $1 million of their own money, in this case, $1 million USD, into funding and accelerating early stage projects, predominantly decentralized applications being built on top of the Credits platform. So if you have a bright idea for a decentralized application, Credits has this awesome accelerator program where they're putting some of the money where their mouth is and trying to get people out there to build on their chain. So I think it's really exciting, and again, might help to really foster an ecosystem around the Credits blockchain, as I think many protocols are again trying to compete and showcase their abilities compared to some of the larger ones like Ethereum. Now, outside of that as well, there's a few other things. They have the full public token swap going on. So again, if you've got your money on an exchange, especially a centralized one, it's likely that they'll conduct this. But if you are holding your own tokens, in this case, again, it's important to do that swap. Outside of that as well, they're looking to get listings on new exchanges. Again, you can keep up to date with the team in order to figure out when those will be announced. And then also the growth of infrastructure of products. So again, as Credits is still early on, I would say, compared to a lot of protocols and reaching its longer term ambitions of being a large infrastructure blockchain. At the same time, there's a lot of interesting things that they've been able to do that we haven't seen in a lot of protocols. They have been building out their infrastructure. They've got a pretty good list of dApps here, and more specifically, really built by the team here, the framework to interact with the Credits ecosystem, whether it be web, whether it be through desktop clients. Again, having those wallets, having the nodes operating soundly, and being able to easily become an integral part in the network. They have that right off the bat. They already have as well a lot of innovative partnerships with different companies who are streamlining Credits services. So you can see the list of companies here. You're welcome to check it out yourself. Again, I'll leave the link down below in the description, where you can see some of the companies they're partnering with to, again, streamline providing these services to enterprise clients. And again, I think this is really the route we need to go. This is with any cryptocurrency project or blockchain project. It needs to be streamlined where maybe they might not have the experience or the team or tools in order to really interact with the blockchain directly. Maybe it needs to be more streamlined through services and through third-party clients. And finally, you've got a lot of partnerships ranging from large companies, IBM, for example, which is considering using the Credits blockchain, to a lot of other different, types of organizations and universities and corporations. So again, you can take a look through these, take a look through some of the details, and again, do your own due diligence, guys. Feel out what you feel for the crypto ecosystem and what Credits has to offer comparative to other projects. In summary, I'll say a lot of positive things. I think Credits has a really unique selling proposition in its quick finality, the high throughput, the fact that its programming language for smart contracts is Java focused. Again, I know it seems so simple, but it's a very big selling point here. And outside of that as well, just providing a clean user experience in order to interact with the Credits blockchain, because you can, again, have a great pool of developers. That's number one. But along with that as well, you need to provide an interface. You need to make it very simple for people to utilize your chain. If you don't have users, you're not going to see a lot of use case, right? And I think that that's what Credits has really nailed. It's really nailed down providing that experience. And again, also seems to have a focus on providing a lot of solid use cases here for enterprise to find value in a high throughput blockchain. So I think there's a lot of benefits here. The only kind of negatives or things that I can think of, again, just trying to be, non-biased here and think about the pros and the cons, is that Credits is in a very competitive ecosystem. It's going to really have to sell these, these selling points that Credits offers comparative to a lot of the well-developed protocols like Ethereum, like EOS, that probably have a lot more funding and a lot more developers. So I hope to see over time Credits be a steady competitor against them. I think they've got a lot of interesting tech, and I think with the program like they have for the accelerating program that's coming up soon, as well as the framework they've built, they've got a damn good chance of possibly coming into the arena and becoming a large, well-known protocol in the crypto space. That being said, everyone, thank you all so much for watching. And again, if you want to check out any of the resources we mentioned, they will be linked down below in the description so you can do your own due diligence and research, as I always recommend here on the channel. Anyways, that's it for the video, everyone. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.